The gaps between the UK and the US when it comes to understanding the arguments for active management are truly profound. I think that's partly because passive management started here, whether it's all the various academics who came up with CAP-M and the efficient markets hypothesis, and even the academics who then did their best to discredit it, whether it's Jack Bogle at Vanguard, all the subsequent work at State Street, BlackRock, etc. It's something that started here. Adds to that, there is the fascination with investing that goes back many decades. Even compared to the City of London, people here in the States are interested in investing.
Fund flows over the last couple of years also suggest that there's an acceleration in the pace of change here in the US, with more and more people moving away from active towards passive.
Yes, you've seen a steady increase in flows into passive management right the way through the 90s. Then you have the building up of the ETF as an investment vehicle, which attracted a lot more interest again. And then post-crisis, you have the fact that active managers didn't have a good crisis, didn't do a good job of limiting losses. And that was always one of the big arguments in favor of active management. Indexes have no choice but to collapse with the index when there's a really serious bear market or crash. Active managers can hold some cash and can limit the damage for you. They didn't. They, on average, underperformed the index during those terrible months in 08 and 09, and that shook confidence. Then in the last 5 or 6 years, you could argue that this is a very unusual situation driven by QE, by the very easy monetary policies, which have meant that the index really has just gone up in a straight line. But the index has gone up in a straight line, and it's become ever harder for active managers to beat it. And so it becomes almost like a classic issue of people chasing where the good performance has been, and that has meant passive.
So you've explained why you think the US is ahead of the UK on this. Are there any other reasons why you think the UK is dragging its feet?
Part of the reason the UK has been so slow is, as always when it comes to investment, the problem is distribution. This is something that, generally speaking, people don't wake up in the morning and say they're going to go and buy. It's something that people need to be sold. Here in the US, it's generally sold to you by people who are stockbrokers, who are part of an investment bank of one kind or another, and have some degree of financial qualifications. In the UK, generally speaking, it's sold to you by somebody who is a life insurance salesperson. The distributors aren't as well educated as they are here, aren't as au fait with all the big academic arguments, and at least until the Retail Distribution Review, because passive funds tend to charge less, they had less of an incentive to offer them, to sell them.
Now, this is just a personal observation. I get the impression that there's a much healthier scepticism towards the fund industry here in the US than there is in the UK. And possibly that partly comes down from the press, the media, and the star fund manager culture that still exists in Britain.
The ongoing cult of the star manager in the UK, whether it's Anthony Bolton or Neil Woodford, I mean, that's an example of the UK just being several decades behind the US. In the 1970s or the 1980s, there was a cult around the best managers at Fidelity and so on. And people in this country have learned that a lot of this is down to randomness and to luck and whatever, and that there are opportunities with passive investing. So some of that is that the UK is just simply behind. I think another important part is that in the UK, there is this sense that New Labour felt it throughout their time in office that the city is the goose that lays the golden eggs for the rest of the economy, that we need the city to prosper. It's a contentious point of view, but there is still that underlying sense.
So do you see things starting to change soon in the UK?
Yes, I mean, there's more interest in fees. There's the Retail Distribution Review itself. If you talk among the big pension funds, which in the UK as everywhere else are the most influential players in the fund management industry in the markets, they are much more sensitive about fees. They are much more interested in passive. You've seen the growth, particularly in the case of Legal & General, you've seen the growth of at least one very big player in passive investment in the UK. There's no question that the UK is moving in the right direction. This is one area, though, where it always feels as though the UK is lagging behind the US.